And when you talk to people who've been investors their entire lives, it's all theoretical. And they don't know what it's really like to be working at 9 o'clock at night and have somebody come in and quit. And to know that this is your only thing. You don't have a portfolio of things, and if one thing blows up, who cares? It's like, this is your entire life and all you've been doing for years, and it could all go down the drain tomorrow. And I think it's just a very different feeling and a very different perspective. And I think people who've never done it never really understand it.
That is Elad Gil. He's a serial entrepreneur, executive, and one of the greatest tech investors of all time, with early stakes in something like $40 billion+ companies. Airbnb, Anduril, Coinbase, Figma, Flexport, Instacart, Notion, Opendoor, Pinterest, Square, Stripe. I could really go on. He's now managing a new billion-dollar venture fund for which he's the sole investor. Elad is also the co-founder of two companies, Color Genomics, a company providing genetic testing, software, and clinical services for large-scale health programs, and before that, Mixer Labs, a company building location infrastructure for mobile devices that was acquired by Twitter. He worked as a VP at Twitter and also started the mobile team at Google. I have an unbelievable level of admiration for Elad as an in-the-weeds tactician and a big-picture thinker, someone who's able to invest and operate at the highest levels, especially when the narrative tends to be that different kinds of people are good at one versus the other. But whether he's investing, founding, incubating, or operating, Elad seems to work singularly toward enabling an agenda of abundance.
And one could argue for the last 70, 80 years, there have been two big agendas. There's been sort of the abundance agenda, which is a pro-abundance, pro-progress, pro-technology agenda. It's better agricultural tech. It's better healthcare. It's better ways to educate people. And then there's a scarcity agenda. We should have less, we should regulate more, we should have fewer kids, we should prevent progress, we should prevent consumption. And these two things have been at odds with each other for a very long time.
The good news is that it seems like innovation compounds on itself in some respects. By almost every metric, humanity's become dramatically better off in the last 100 years. Whether it's childhood mortality, average life expectancy, rates of poverty or literacy, in spite of the headlines that tell us otherwise and the existential risks that still exist, things are just dramatically better than they've ever been. In the same time period, we would have had one new mega tech cycle like semiconductors, microcomputers, or the internet. We've seen what Elad describes as one long boom, at least in the realm of bits: cloud, mobile, SaaS, vertical SaaS, crypto, AI. In and outside the scope of technology, he spends a lot of time thinking about what that means at a macro level, and critically whether entrepreneurship, that act of bringing technology to the masses, is fundamentally founder-limited or market-limited.
Yeah, I think innovation is definitely speeding up. And part of that is because you have a higher baseline to build off of. I think you can ask a broader question of human capital flows, and where is human capital aggregating over time? You know, in the 80s it was Wall Street. Right now it's tech. All the smart people go into a certain field, they draw other smart people, that field accelerates dramatically, but that also drains human capital out of other aspects of society. The person who would have been a teacher 70 years ago maybe is a Fortune 500 CEO today. Despite
the progress we've seen and the abundance it's afforded humanity, there's areas we look over or actively choose to ignore. In 2021, when Anduril, a defense tech startup, was raising $450 million at a time when defense in Silicon Valley was taboo, to say the least, it wasn't some big-name fund with hundreds of employees that led the financing. It was Elad Gil.
At the time, because of the zeitgeist and Trump was just coming in and all the rest, it was very unpopular. But yeah, I'd get texts where people would send me pictures of the founders of the different politicians and say, how could you possibly support this person? You know, back to the point of the world being in the best state it's ever been for a long time. I think people forgot that there's war. Very good people tend to project goodness on bad people. Or you project your own positive motives onto people who actually are grabbing for power or who don't really care and are quite cynical, but you think that they probably are saying things because they mean it in a good way. They couldn't possibly be bad people, but they're saying this really weird stuff. And if you actually go and look at old fairy tales, right? You look at the Grimm fairy tales, it's constant warnings that there are bad people dressed up as good people. It's like Little Red Riding Hood and the Wolf, right? And societally, we forgot that.
I think this ability for small groups of people or even individuals to have such incredible impact that rivals that of larger institutions is only just beginning. AI is probably the perfect example of this. More immediately, it's a positive instrument that allows us to do more with less. Longer term, though, we might grapple with some of the bigger questions as we're gradually replaced. What do people do when they suddenly have nothing to do at all?
I think in AI right now, there's this really interesting phenomenon that's happening where with every advancement in the scale and impact of the models that we have on the large language model side, we open up new markets that weren't available before. I think in the short run, I'm hyper optimistic about AI and its applications and the way it's going to lift up humanity in all sorts of ways and be very valuable. And then I think there are some scenarios in the long run where, things could be existential from a risk perspective.
We spoke about blank slates, declining institutions, optimism, investing versus operating, the deferral of adulthood, the deterioration of speed, defense tech, human capital flows, and what happens when AI exports French culture. This is the Lavoisier Podcast.
We choose to go to the moon.
We deliver right to the desktop.
We're going to reinvent the phone. Oh, takes it again.
Cool, man. Thank you so much for doing this again.
Yeah, thanks for doing it.
Okay, so I want to start with actually the dedication to your book, High Growth Handbook, in your book. You write, "To my wife and son, suddenly everything is possible again." And this is an excerpt, right? It's from Eating Animals by Jonathan Safran Foer. I hope I'm pronouncing that right. And he writes, "A few days after we came home from the hospital, I sent a letter to a friend, including a photo of my son and some first impressions of fatherhood. He responded simply, 'Everything is possible again.' It was the perfect thing to write because it was exactly how I felt. We could retell our stories and make them better, more representative or aspirational, or we could choose to tell different stories. The world itself had another chance." Love that quote. Do you think this blank slate character is what draws you to startups?
Yeah, it's interesting because if you think about blank slates, there's huge positives and huge negatives. So the positive, of course, is that you can suddenly restart something, you can reimagine something on a blank canvas. And the negative is it's incredibly hard to do something from the bottom up. And many institutions or many companies or many movements or whatever sort of type of thing you want to work on usually takes 5, 10, 15 years for it to turn into something big.
Yeah.
And so you start with something really small and hope that it becomes something very large. I think you could argue that societally, we have too little blank slate right now. And so we see this sort of in how institutions seem to be decaying a bit. And there's a lack of rebirth. And it seems like that's sort of driven by two things. One is just the age of the institution. For example, when the NIH was founded over 100 years ago, the very first head of the NIH was in his late 20s. Now it's being run by septuagenarians. And so you see all sorts of aspects of almost society aging, institutions aging, and no mechanisms for renewal. And so I think separate from just blank slate startups, there's a question of how do you create broader institutional renewal? And I think that's a really interesting question. Like on the NIH side, some people have posited, should a subset of the NIH budget every year go to fund new mini institutes that effectively would compete against the NIH on certain metrics and they'd get more funding over time? And so you can ask the question of how do we create more blank slates in society more broadly, because they may actually be quite useful.
This is a really cool segue, actually, on the sort of institution side. There's this really interesting statistic you shared from a 2023 study from the Institute of Labor Economics. Shows through this analysis of lots of books published over the course of centuries in French, in English, I think in German, suggesting Western society is shifting away from a culture of progress and towards one of caution, one of worry, one of risk. And the metric here is words per million related to themes of progress versus caution in those three languages. And themes of progress, it seems, over this study are down since I think like the 70s. And I guess more broadly, there's this argument that media having gone sour on tech is more of a media phenomenon rather than indicative of what people actually think of technology. But I'm curious what you think here, because I think I've heard you say this before, that optimism is a reflective asset, right? The more people think something can be done, more likely it actually gets done. Why do you think we're less optimistic?
It's really interesting because if you look at the underlying data, by basically every metric, the planet or people, humanity's gotten better, right? So there's way less childhood disease. Childhood education of girls and boys has gone way up over the last 40, 50 years. Famine has decreased dramatically. Global GDP and people living in poverty, but GDP's gone up, poverty has shrunk. And so literally in every metric, things are dramatically better than they've ever been for humanity. There were fewer wars, fewer everything. And then if you look at what are the countries that are most optimistic, it tends to be the poorest countries. And so if you look at countries that are still developing or in certain processes of development, those people are the most optimistic. If you look at the Western world, it's the most pessimistic. And so you ask, why are the people that have the most, the people who are least happy with the state of the world and the least believing in the future progress that could be had? And I think more broadly, you could ask, what are the big agendas driving societal change right now? And one could argue for the last 70, 80 years, maybe longer than that, if you go back to the Luddites and things like that, there have been two big agendas. There's been sort of the abundance agenda, which is a pro-abundance, pro-progress, pro-technology agenda. And it's not just technology, meaning, the software industry. It's better agricultural tech. It's better healthcare. It's better ways to educate people, right? That's progress and that's technology. Technology was, hitting two stones together and creating fire, right? That's early technology. And then there's a scarcity agenda. We should have less, we should regulate more, we should have fewer kids, we should prevent progress, we should prevent consumption. And these two things have been at odds with each other for a very long time. And one could argue for the last 70, 80 years, maybe longer than that, if you go back to the Luddites and things like that, there have been two big agendas. There's been sort of the abundance agenda, which is a pro-abundance, pro-progress, pro-technology agenda. And it's not just technology, meaning, the software industry. It's better agricultural tech. It's better healthcare. It's better ways to educate people, right? That's progress and that's technology. Technology was, hitting two stones together and creating fire, right? That's early technology. And then there's a scarcity agenda. We should have less, we should regulate more, we should have fewer kids, we should prevent progress, we should prevent consumption. And these two things have been at odds with each other for a very long time. About famine in the 60s and 70s. There was actually a book written by a Stanford University expert in the 60s saying that, we're going to have massive famine for the next 20 years. And of course, that was a year where famine dropped dramatically and then stayed low. But you could argue that the removal of this really massive clean energy source from societal use, which is what happened in the 70s, really decreased energy abundance, and energy is an input in everything else. And you could argue it actually decreased progress in all sorts of ways. And that's despite, France being at 70% nuclear power today, Japan is 30%, the US is still 18%. And so we've been using it safely for decades across multiple countries, but it's been constrained. And so I think that's a broader sort of societal battle that's happening right now. And I do think it's a very real sort of set of competing philosophies.
To touch on, the more macro mechanism by which a lot of this stuff is being driven in the first place, you wrote back in 2021 this really interesting piece about mega cycles in tech. The idea here is that, usually every 8 to 10 years, technology industry would go through a boom and a bust cycle, right? New platform would emerge, you'd see lots of investment, lots of speculation, and you'd have a handful of people who actually ended up driving most of the value in any of these industries. And you saw it in the 60s with semiconductors, 70s with microcomputers, 80s with the internet, or rather 90s with the internet. And each successive wave, right, was bigger than the last one. But then you point out something kind of weird happened, right? You note that these boom and bust cycles have been replaced by kind of just a constant boom over the last 20 years that we've seen with cloud, mobile, SaaS, vertical SaaS, fintech, AI, crypto, each of which earlier on would have been their own cycle in their own right. Do you think innovation is speeding up, or is there something more nuanced happening?
Yeah, I think innovation is definitely speeding up. And part of that is because you have a higher baseline to build off of. It's kind of like the type of mathematics you do today is way more advanced than what you did 100 years ago because you have a higher baseline for a lot of math. But another piece of it is all these things build off of each other. And the really big shifts are, if you look at the macro of what's driving all this stuff, is we converted to the internet from other forms of communication. So suddenly you had global liquidity of communication where every single person on the planet could communicate with each other. You moved to mobile, so you could access this global information network and computers from anywhere in the world at any time. That's also true for Wi-Fi penetration and enterprise and everything else. And so you had this massive shift of people online, and that drove a lot of these other trends. And then simultaneously, you had big shifts in terms of semiconductor technology, in terms of internet bandwidth, in terms of all these other things. And so now suddenly, if you launch a product, you can grow faster than ever before because you can reach billions and billions of people instantaneously. 20 years ago, when the total population that was online was 100 million people or whatever it was, hitting 200 million users was literally impossible. Right? Today, you could do that because it's a fraction of the people on the internet, and you can do it very rapidly because everybody's always connected. And so it accelerates everything. There's actually and again, this acceleration is in some sense reflexive, and that's separate from boom bust cycles. We'll still have those, And we almost had one, and if it was not for AI happening right when it did, we would have had a big bust, in my opinion. And AI kind of kept everything going. But if you read some of the really old school kind of literature on some of this stuff, and I mean like sci-fi literature, I don't mean, scientific literature. There's books like Accelerando, I don't know if you ever read it. It was like from the early 2000s. It's kind of a tough read. It has really good ideas, but it's not very well written. But it's basically dealing with a handful of years leading up into the singularity where you start off and every year is equivalent to 10 years before in terms of progress. And then every month is equivalent to every year, and then every week is equivalent. And so you're compressing the time frame at which things are happening because all the technologies and all the advancements are building off of each other. And there's no reason to think that that isn't the case until you hit some physical limit. And the main things that could prevent that acceleration is regulation, so some forms that would stymie that. A lack of resources, and resources usually means energy or other types of input. And there's some things that are real, scarcity items and things that are fake, right? Like there's lots of rare earth minerals, they're called rare earth, we're just unwilling to mine them, right? There's huge deposits in the US, Canada, et cetera. And then there's human capital. And human capital may increasingly be replaced by digital intelligences of whatever form, right? And I don't mean that necessarily as like sentient, self-aware beings, I just mean more like the ability to do things faster and faster with machines or computers. So it does seem like we're on this upswing and it'll bounce around a little bit, but assuming we don't interfere in different ways or that there isn't certain types of scarcity, I think we'll only see faster and faster cycles.
So to put our, investor caps on here for a minute, the meta question that I've heard you talk about a lot becomes, if you're looking at any opportunity and as our sort of timelines compress, is whether, innovation itself is entrepreneur or founder restricted versus market restricted. The former being, if we just sort of throw more smart people at any given problem, that we'll see that much more progress. Or, on the other side, that there's only a certain number of real opportunities at every given point in time because of regulatory factors or any real innovation happening or patterns of buying behavior or whatever else. Sure. How do you think about that?
Yeah, so I came up with this sort of framework of like, is the startup universe founder limited or market limited a couple years ago? And to your point, I feel like there are these two competing viewpoints. And I don't know that either one is 100% right or wrong. So I would almost view the YC viewpoint as the we're founder limited. If we have many more great founders, we'll be able to accomplish more things because we'll have more smart people working against more places. And then there's the other point of view, which is we're market or why now limited in terms of technology basis, which is, at any given moment in time, there's only so many markets that are available for innovation because the technology shift or the regulatory shift or whatever enables a shift in that market. That's kind of the why now statement. And some firms like Sequoia Capital think in those terms a bit more. And obviously it's a mix of both. I think if I had to fall on the balance between those two things, I think if we took all the great founders that already existed today and could efficiently point them at the right market opportunities, we would rapidly saturate them. I think we are market limited. The flip side of it is that isn't how it works. And so you could argue that having more people looking at more things means that you'll surface these things faster and you'll be able to find those opportunities. I think in AI right now, there's this really interesting phenomenon that's happening where with every advancement in the scale and impact of the models that we have on the large language model side, things like GPT-4 or Mistral or Llama, we open up new markets that weren't available before. So for example, if you talk to the folks at Harvey, which is a legal AI co-pilot that a lot of big firms are using today, their view was that GPT-4 made a big difference versus GPT-3.5 in terms of enabling the capabilities that they needed to be able to build a good legal co-pilot. Mm-hmm. And so I kind of view this now as this GPT ladder. With every step up in increments of new model, GPT-4 to 5, 5 to 6, et cetera, we're going to open up entirely new markets. And so I actually think we're now going to be capabilities driven. And every time there's a big release, suddenly there'll be like 2 or 3 things that we can do before, maybe 10 things we can do before, 100 things, whatever it is. And so I do think we're on this really interesting curve of giant steps in innovation every 2 years because of the model cycles. And it's kind of like in the 90s in the semiconductor world where every release of a new chip for your desktop could, in some cases, dramatically impact what you could do on that device. Yeah. Or on the mobile side, we saw that with bandwidth or other things sort of opening up. I think we're going through the same thing right now in AI.
Interesting. I've heard you talk about this concept, so I guess to put ourselves in the shoes of a founder. You've talked about this concept that I found really interesting. Not sure whether you coined this or not. EIR syndrome, entrepreneur in residence syndrome, the idea that second-time founders are often going to aim too high initially because they want to do something bigger than whatever they did last time. But to your point earlier, if we're being like market focused, how can you tell that what you're starting in, that you're going niche in a market that's big enough to begin with?
Yeah, I think it's really hard because to some extent you could argue that startups are the art of the non-obvious. Because if it was obvious, everybody would be doing it, right? And so to some extent, on the one hand, you could say, well, you kind of have to dig around and sometimes that small niche thing becomes massive. Or the thing that seems kind of weird, Airbnb, you're staying in someone else's house and suddenly it becomes one of the biggest travel platforms in the world. Is one way to do it. The other way to do it is, I think sometimes people are just farther ahead of the curve of seeing the future. And that could be because they're exposed to it. They're working on AI early, and then suddenly they can see the capabilities. So they went and started companies like Character or Harvey or Perplexity or some of these things. And then in other cases, it happens almost accidentally. And so I think there's lots of different ways to start companies or to find ideas to work on. But I do think that second-time founders who have been successful tend to overthink it because they want their next startup to be even bigger. And sometimes the very biggest ideas seem very small and niche and less interesting. There's this guy, Pierre Lamond, who is a very well-known operator and then investor. He was at Sequoia for many years, and then I think he helped APC and a few other folks. And before that, he operated for decades in the semiconductor industry. I think he's in his 90s now and still investing, which is pretty amazing. So he has some really good quotes from like 20, 30 years ago, which I think still hold true today, which is, he'd rather have a small piece of a giant TAM than dominate a small TAM, total addressable market. Because if you're a small piece, you have lots of room to grow, you have lots of directions, there's lots you can do. But if you're in a small TAM, even if you dominate it, you're always going to be constrained by that market, and then you have to find a new market to go into, and that's much harder. And I think that's an interesting kind of perspective.
Definitely. You mentioned the sort of like operator-investor dichotomy. I mean, the narrative that I find really interesting is usually that like very different personality types are better at one versus the other. That maybe if you're somebody who enjoys talking to lots of different people and going very deep on lots of different areas, and you're like maybe a little ADHD, then like, okay, go invest. Whereas if you're somebody who's willing to commit yourself to an idea for 8 years, 10 years or something, then like go start a company or join a company in service of that. Do you buy that? Do you think that like they're necessarily mutually exclusive?
No, I think people tend to misunderstand what makes for a good investor. And maybe in some cases they tend to misunderstand what makes for a good operator, which actually is different from what makes for a good entrepreneur. Okay. And I think those are very different concepts, because to some extent when you're in the 0 to 1 stage, one could argue the primary skill set that you need is the ability to find product market fit, whatever that means. Right? And so people misunderstand what it means to actually be a good founder early. And that's very different from being a good founder late, right? You could argue that somebody like Zuckerberg at Facebook or Elon Musk are great both early stage and late stage founders. And there's very few people like that, right? Like they're still doing massive things at scale, that are impacting entire industries. Most people don't make it there, right? But there may be people who would be amazing at that stage, who would be awful at the early stage. So I think that's necessarily true. You do see some really great people who are investors who before had storied careers in operating. That'd be Mark Andreessen and Ben Horowitz at Andreessen Horowitz, or geez, I have a whole list and I just forgot it.
I mean, you're sitting right there, so.
Yeah, no, I mean, I think there's traditionally been a lot of Don Valentine, who started Sequoia, was an operator for many years. Peter Thiel at Founders Fund is a 2-time founder, right? He started PayPal what merged with X.com, as well as Palantir. Trey Stevens at Founders Fund started Anduril. And so you see that, and you see that there's these really great founder investors. And then you see people who've never started a company who are great investors, like Mike Moritz at Sequoia. There's people who do hybrids where they do incubations, like Hemant at GC, or Josh Kushner at Thrive. So I think it's more nuanced than people make it out to be. And I think a lot of it is, can you identify opportunities in different ways, and then can you help grow them or not?
In your own experience, having been on both sides of the table, do you find that like those skill sets compound on each other in some way, or are they kind of like different enough things that one doesn't necessarily help the other? And I mean that from a perspective not of necessarily giving like tactical advice to founders, sure. Obviously very, very important, but from like on the investing side, maybe like a selection sort of perspective, and then from the investor or the founder side as well.
Yeah, it goes both ways. I think the ways that being an operator is a positive is, number one, you have a natural intuition for certain product holes or gaps or things that are working well or things that your company bought as like vendors you're using, whatever. And so you may have like natural intuition for that moment in time in terms of what's needed from a product and market perspective. I think the second way it helps is you have a network of people that were in the mix that may go start things, and so you get to talk to them early, and they may trust you more because you've already worked with them, and so they'll want you to work with them as an investor. And then you may also have an interesting perspective on technology or market shifts that somebody who hasn't operated doesn't quite understand.
Yeah.
The flip side of it is where sometimes you see people go really bad as an operator turned investor is they extrapolate what they would do with an idea or company versus what the founder will actually do. So they imagine themselves as the founder and they say, oh, I'd go do these 7 things and this is so great and I'm going to invest and all. And in reality, the founder may want to do something very different, and they should. I mean, it's their company.
Yeah.
Or they may be pugnacious on the board because they want to, they're getting upset because the person isn't doing what they would have done because they were a good operator. And so there's all sorts of ways it can backfire. I think net, it's positive and good and helpful in part because it's not just the advice you give, it's the empathy you have. You know how hard it is. And when you talk to people who've been investors their entire lives, it's all theoretical. And they don't know what it's really like to be working at 9 o'clock at night and have somebody come in and quit. And to know that this is your only thing. You don't have a portfolio of things, and if one thing blows up, who cares? It's like this is your entire life and all you've been doing for years, and it could all go down the drain tomorrow. And I think it's just a very different feeling and a very different perspective. And I think people who've never done it never really understand it.
To shift gears for a second, I was preparing for this and like thinking of questions, and it sort of occurred to me that in a lot of ways you're like the Joe Rogan of venture, in the sense that
MMA. That's all the fighting I do on the side. So yeah.
No, and I mean that as a compliment, because like in a sense you're able to beat out lots of legacy institutions and massive funds as like one guy. You've used the example of Arthur Rock before, who like invested in Apple and Intel and some others back in the 70s, but like it's no secret, you're really good at this. Do you think the brands of individuals are becoming more powerful than the brands of institutions?
I think these are one of those things that toggle back and forth over time. And that's true of every industry. In some industries, the brand of individuals is always codominant with the brand of, I'll give you sports, right? Yeah. Like Kobe or LeBron, it's one-word names and everybody knows who you're talking about, right? That's brand, and that's individual brand versus, is he with the Lakers now or, the Timberwolves or whatever. And so in certain areas, that's always been the case. And venture has also been that way, right? Like in the 90s, John Doerr and Mike Moritz were the 2 biggest names in ventures, but there's others. There's Jeff Yang, who was at Redpoint, and there's a variety of other people. And you've seen that cycle through time in different ways. And so I think it's always been kind of both. And I think the pendulum swings back and forth. I think maybe the place where it's being most disruptive to some extent is media, where there's been massive shifts in that business over the last 25 years. It is happening somewhat in venture, but I always think venture was a hybrid. There's always kind of certain stars at different firms that people would want to work with, and there's been certain firms that have been platforms. But you can kind of go industry by industry, and I think there's a mix. GE, everybody knew Jack Welch, right? And so it kind of depends, I think.
I think what's so mind-bending to me about what you do is that like you would think that the advantage of having a massive venture fund and you employ 50 people, 80 people, whatever, is that you can just see more stuff and therefore you're going to make more good investments because like the sort of corpus of information you're working with is better. But like apparently not, right? Because you have you've backed 40 unicorns, I think about, 30 something of them at pre-seed, seed, or Series A. So like, what's everyone missing? Like, how are you seeing all the best opportunities when funds with teams of 50 can't like hold a candle to what you've done over the last decade?
Geez. I think there's been a lot of great funds. I think a lot of people have done very well over time. I think the reality is that at very large venture firms, there's a lot of very good people and a lot of people who aren't as strong. And that's true of any organization. Once you hit a certain scale, it's a mix of people. And so you have a bit more aversion of the mean at some firms. And that isn't every firm, it's some, right? And also you have people who are making decisions who may or may not have the taste. And I think venture investing is a lot about taste. On the investor side, it's about people who are good at investing. You can debate what good means. Is good you're giving the best advice? Is good you have the best access? Is good you have the best taste? Is good you're providing governance on the board level in a good way? And so venture capital is a bundle of all these things. And from a founder perspective, it's one bundle, and from a investor or their backer perspective, their LPs, it's a different bundle of things. And so I think there's also different definitions of good. There's people with amazing returns who are jerks and bad on the board and, not great to deal with, but somehow because they had early success, they keep having success because people want to work with people who've done important investments over time. But I do think there's also just this question of, what are small groups of people with exceptional taste and exceptional frameworks to understand whether a business is working or not, and then the exceptional ability to help. And those small groups will probably outperform, a giant team that is trying to do everything. But the flip side of it is that giant team may have a very different strategy, and they may have different people backing them. Their LPs may say, I'm looking for a very consistent 2x on giant amounts of money. And that's a different strategy from, am I going to do something that's smaller and more focused on the generational companies or whatever it is. So I just think I don't think there's a right strategy, and so often these things are also reflective of that.
Yeah.
The right approach to how you should be doing things or investing or whatever it is. I think more broadly, there's this concept of, again, reversion to the mean, and how do you think about it?
To touch on your approach specifically, we touched on this, I think, briefly before, but you're very market first, right? I think it's Andy Ratcliffe, co-founder of Benchmark, who says the number one company killer is lack of market, right? So great team, terrible market, market wins. Terrible team, great market, market wins. Great team, great market, something magical happens. Now, there's things that you can kind of see at the edges that you think are likely going to come to fruition. You don't necessarily know who's going to do them. And then there's those that you never would have expected to have taken off in the first place. One of the key things, right, about companies that become huge is, to your point, like they're non-obvious to begin with. So the question is basically like, if you're a market-first investor, how can you do that when you don't know a good proportion of markets that are going to be created in the first place?
I think most markets aren't created. I think most markets adapt to technology. And so the markets pre-exist in most cases. That's not all cases, but in most cases you're replacing something offline and making it better or easier or more accessible. And so I think it's often more about that. And often what people miss when they look at markets is they misunderstand the pent-up demand for something, right? That was Uber famously, where you weren't just replacing taxis, which is how some people thought about it. You also replacing when it was just transportation, and when are you going to drive yourself versus not, and are you going out drinking with your friends, and therefore you need whatever it is, right? In terms of you don't want to take the train ride, you'll just hire an hour-long Uber or whatever. So I think people misunderstood what the market actually is. And I think that's where people a lot of go wrong. And I should say, I think founders, as a two-time founder myself, are incredibly important, right? And are the motive force for companies. But I have seen great people get crushed by bad markets and vice versa. Terrible people do very well in good markets. And I still occasionally will invest behind a person that I think is very good. Because when you're investing in the pre-seed of a company and there's one person or two people and nothing is built, you don't know what direction it will actually go in. Right? There's a huge shift in your certainty around where a company will go as you move from a pre-seed to a seed, where suddenly there's a product. It may or may not be launched, but you at least kind of know what's really actually ended up getting built. Yeah. But I'd say a reasonable proportion of the time, if you invest super early, the thing ships, right? Not always, right? And to some extent, the things that have done best that I've observed do well quickly. They do well early in the life of a company. And one of the big myths of Silicon Valley is you should keep grinding forever, and if you just never give up, you'll eventually hit something. And I think that's very self-serving for investors to say, because for them it's just an option. They've invested in 30 things and you're one of them. But for a founder, it's your entire life. And if something doesn't work fast, it usually doesn't work. And there's all sorts of counterexamples to that, right? But most of the things that I've been involved with that have taken off, took off quickly in the first year or year and a half of being launched. Sometimes in the first week, right?
Similarly here, there's this great take from, I think it's Chris Peck at Pace Capital, on markets and how as an entrepreneur, you're kind of like surfing a wave, right? He says half the battle is making sure you're in the water when the wave comes and putting yourself in the position to surf waves, because nobody can make waves themselves. In tandem here, it seems, and this is fascinating to me, that there's like time and time again for companies that ended up being massive successes, this take from the founders that they're actually late, right? Like this was the case, I think, with Bill Gates and starting Microsoft, with Mark Andreessen and starting Netscape. But the point is, a lot of successful founders think they're late. How do you know if you're actually late? Like, can you?
Well, I mean, I think with some of those examples, they were actually early to a new wave, right? Microsoft really started off as developer tools, and then it took a couple years, or dev tools and programming languages, to actually get to the OS, which was IBM kind of putting something out to bid because they didn't think it was important. And so you could argue they were actually kind of early, and they were building towards it for a couple years until they hit the kind of big thing. And then similarly, Mark had been working on the very early forms of internet browsers and inventing a lot of the technology. And the internet wasn't a broad spread thing societally. So it's quite early to the internet wave, but he was late to the shrink wrap software era, which was the era that was ending as he and others moved to Silicon Valley in the 90s. So it also comes down to like, what wave do you actually think you're part of? And is that the wave that's relevant? And that's where you see a lot of people who leave companies to start companies make a mistake, is they base their product on what's really current in the context of the bigger company they're at or the current era. And usually if it takes you a couple months to recruit a team and a couple months to build something, you prototype it yourself at 6 months, a year, or whatever later, you kind of want to be a little bit ahead of where things are, because you'll have to build things out, you have to get first customers. You kind of want to be early in a solid market, if you can be. And in some cases, you also see people pull a market forward. You could argue that's what Musk did with Tesla, or potentially with SpaceX relative to satellite-based communications. But most of the time, people are more part of a market shift. It's sort of, I don't know if you know, like the great man theory of history.
Yeah, of course.
It's basically that, and history is a mix of just these predetermined paths in some sense the societies are on, and then there are versions of history where an exceptional individual goes and changes the course, right? If that person hadn't existed, a different future would have happened. And it's probably a mix of both. And similarly in technology and entrepreneurship, there's some inevitable long-term future, but we can get there faster or sooner, or maybe the direction shifts a bit depending on specific individuals.
Here's a really fun one. There's this interesting pattern that sort of recurs across the careers of great scientists, but also creatives and business people and politicians, this idea of a miracle year, right, in which they make multiple sort of seemingly independent breakthroughs in the span of a single year or two. So like Einstein published 4 groundbreaking papers in 1905 while working as a clerk in Bern. Newton was 22, developed the theory of gravity along with the language of calculus required to express it. Mozart composed 6 major piano concertos at 28. Picasso painted a work that's often regarded as the founding moment of Cubism in modern art at age 26. Sam Altman talks a lot about this and having tracked this at YC, but it seems that founders recently have gotten older on average. I'm curious if you've seen that anecdotally and why you think that is.
Yeah, I think there's maybe 3 separable things to talk about. And maybe we can come back to the founder question, because societally, if you look at it, it's something Patrick Collison has pointed out, which is it seems like the average age of accomplishment has somehow gone up. Like say that you go back 50 years, 100 years, whatever, and you ask, what are the most productive 22-year-olds doing, or the most productive 24-year-olds, or whatever, you actually see massive impact to the point of what you're saying. And the people who built the Hoover Dam, or the people who started art movements, or these different technology trends or giant companies were started by very young people often. And in some cases, that's field dependent, right? You look at math versus physics versus biology, and mathematicians and physicists are very fecund in their teens and 20s, and then 30s and 40s and 50s as biologists, and you can kind of see the career arc of people in terms of when they have impact. But on average, if you were to ask who are the most productive people by each age range now versus in the past, it seemed like in the past there was a lot more young people in general in almost every field having a bigger impact. And there's some counterexamples of that. In sports, it was always young people, and in music, it's always, and that's in part because of the characteristics you need. Like you're just physically more fit when you're younger. And so the question is, why is that? And I think related to that, societally, we've seen a lot of deferral of adulthood. And so if you look at a lot of metrics of adulthood, when do you get your first job? People used to get their first job a lot more when they were a teenager. When did you move out of your parents' house? When did you finish school? When did you get married? When did you have kids for the first time? The age of which you have children has gone up dramatically. And if you're educated, or especially if you have an advanced degree, it's very late in life relative to where it used to be, right? You shift from your teens and 20s to your late 20s, 30s, in some cases later. And so you're deferring a lot of things that traditionally would be considered adulthood and responsibility. And so is that related or not, right? There's these interesting questions of societally, if you shift adulthood effectively, are you also shifting accomplishment? Now that's separate, I think, from the founder wave stuff, but I do think it's a broad, interesting societal question of why is the average age of impact going up, and is that a good thing or a bad thing? Also just who's running the country. We become a gerontocracy. That's true in the Senate and Congress. Our presidential candidates, I think, are in their near 80s, right? Octogenarian, presidency, right? Bill Clinton, who was president how many years ago? Like at this point, he was elected in '92, so he was president 32 years ago. Is younger than Biden and Trump, right? Our president from 32 years ago, right? And so why is that? So I think there's interesting questions around that stuff more broadly. In terms of the founder side of things, you see this happen with different waves, and I think it's a little bit reflective of what sort of things are being worked on and what markets are actually available. Anytime you have an opening on consumer markets, you tend to have younger founders do well. Anytime you have something that's more B2B driven, it tends to be slightly older founders. And if it's hard tech driven, it's a mix. And that has to do with what disciplines you need to understand, what do you need to be able to have done before in the past, et cetera. And then you also have entire verticals where the entire founding community is aged out. There aren't very many young semiconductor founders anymore. And there aren't that many young people in semiconductors more generally, right? You've just aged out an industry vertical. I think you can ask a broader question of human capital flows and where is human capital aggregating over time? Because fundamentally, we've seen massive shifts on that. And that has very deep societal implications as well. A friend of mine is this guy, Charlie Songhurst, and he has this thing that I'd call like the Songhurst hypothesis or the Songhurst rule or something about human capital flows, where he basically has posited, if you look through the 60s, 70s, 80s, et cetera, where human capital was concentrated has shifted. Where the hot jobs were has shifted. You know, in the 80s, it was Wall Street. Right now, it's tech. You know, in the 60s and 70s, maybe it was a mix of government and certain industrials and other things. And so his view is that these are network effects and feedback loops where all the smart people go into a certain field. They draw other smart people. That field accelerates dramatically. You see enormous innovation in Wall Street in the 80s, for example. But that also drains human capital out of other aspects of society. So maybe the average person going to government is less adept than they were 60 years ago in the 60s when they were getting the very best people. That doesn't mean there aren't great people in government. It just means it may have shifted the mix. And you see that in other fields as well. And so I think there's that broader question as well of like human capital flows and is it good or bad? The extreme version of that would be if you look at the roles that were available to women 70 years ago. It was very limited, which is very bad societally. It's bad for women, but it also meant that the roles that women could participate in, things like teaching and other areas, had incredible people on average. And they still do have some really great people, but that human capital concentration shifted because suddenly you could do any role, and then you saw the person who would have been a teacher 70 years ago maybe is a Fortune 500 CEO today. Do you know what I mean? It's just, and so there are these really interesting shifts that I think have been happening over time more broadly.
To your, I guess, earlier theme here of aging in general and getting older, it seems that career-wise, earlier on in your career, you're rewarded mostly for saying yes to everything. Whereas, if you're in your shoes and everybody wants a piece of your time, it's actually an important shift to sort of determine what to say yes or what to say no to. So, question for you is later on, how do you determine what to say yes to? It seems like a really, really critical problem, especially if you're looking for great companies or great opportunities.
Yeah, I think it depends on what your utility function is. So what do you care about in life? And I think you kind of map that against that. And I think if you look at people's lives and their careers and everything, there's actually like I can't remember which book it was. It's some book on Hinduism or something I remember reading once where basically they were talking about this concept of like different stages of life and like interlocking circles, right? And so early in life in your 20s and 30s, you're focused on school and career and kind of yourself. And then in your 20s and 30s, you're focused more on family. And then, in your 40s, you're focused on society, or 40s, 50s, 60s, whatever. And then eventually you become like a sadhu and you go, live in a cave and meditate or whatever, right? Yeah. And in each stage, you're intermixing those things. Is just the weight that you put on each of them shifts, right? So there's that kind of framework in terms of how to think about it, in terms of where to allocate time. And that's why sometimes you see people later in life when they have the capability and the capital and the connections or whatever, they may shift to society as their primary focus. They may shift to their community as their primary focus over time, or giving back to the future generation. And then separate from that is just kind of like, what do you care about more generally? And people who work in business, or I think in general, have 4 or 5 different drivers. There's impact, there's fun, and who do you get to work with? There's money, there's power, there's fame, or certain types of status. And so there's these mix of things that are sort of primary human drivers. And the question is, what's your mix? And how does that shift over time? And then how does that reflect into where you want to spend time?
I'm trying to think of a good segue here. Maybe there isn't one. Maybe something to the point of like things that shift that people care about over time. Anyway, I want to talk about defense tech. To get a little bit more specific here. Back in 2021, you led the Anduril Series D, which is insane that you could do that as an individual, which you were an early investor in as well. You mentioned earlier on you actually got hate texts when you'd done that investment earlier on for backing a defense company, but when it really wasn't popular. Things have sort of started to shift. I know you've talked a lot about in sort of a requests for startups way, like a software first defense prime. Why was the Valley so anti-defense tech for so long?
Yeah, I think there's a few potential interpretations. I think, back to the point of the world being in the best state it's ever been for a long time, I think people forgot that there's war and that there's bad people and all these things. I think one of my big learnings of the last 10 years, or I'd say my two big learnings is number one, when people repeatedly tell you who they are, you should believe them. And you see that now in anti-Semitism and some of the other things that are kind of surfacing. You're like, oh yeah, people have been telling us that they really believe certain things for a long time and we just kind of didn't believe it. But secondly, that very good people tend to project goodness on bad people. Or you project your own positive motives onto people who actually are grabbing for power or who don't really care and are quite cynical, but you think that they probably are saying things because they mean it in a good way. They couldn't possibly be bad people, but they're saying this really weird stuff about how it's okay to kill a bunch of people and decolonize. Is that good or bad, And you're like, oh, they're probably good people and they're just saying that, right? And so I think that a lot of very good people for a period of time misunderstood reality a bit, both in terms of bad people existing, the conflict exists, all the stuff. And if you actually go and look at old fairy tales, right? You look at the Grimm fairy tales, it's constant warnings that there are bad people dressed up as good people. It's like Little Red Riding Hood and the Wolf, or it's Hansel and Gretel and the kind old lady in the forest with the candy house. You're constantly being warned mimetically, right? Those were the old memes. Don't trust people. There are bad people out there who will take advantage of you, right? And societally, we forgot that. And if you look on like the Meta portal and you look at the Little Red Riding Hood story there now, instead of Little Red Riding Hood fighting the wolf or the forester coming in and killing it with an axe, they have a dance party and go shopping together at the end, right? And you're like, no, societally, we need to remember that there's these things going on. So I think what happened is, there's a period of time where people just forgot these things tend to happen. And there was this rise of sort of political activism within companies where a small group of people had a very big influence. So the way I got into defense tech is, Project Maven shut down at Google, and all these big tech companies were talking about withdrawing from defense. And I said, wow, it seems like a big opportunity for startups suddenly, right? Before you just assumed the big tech companies would do it. They don't want to do it, fantastic. And so I just started looking around and I ran across the folks at Anduril. And if you look at what causes for a defense tech company to be good, there's like 5 different things that you need, and they had all 5 of those things. And so I got involved quite early and just started working with them in different ways. And to your point, at the time, because of the zeitgeist and Trump was just coming in and all the rest, it was very unpopular. And that's despite the team being split in terms of the founders between Democrats and Republicans, right? The CEO, Brian, is actually a Democrat, et cetera. So it was kind of silly that people got so worked up about it. But yeah, I'd get texts where people would send me pictures of the founders with the different politicians and say, how could you possibly support this person? And one well-known founder over lunch said, how could you be such a fascist or make such a fascistic investment? And so I just think like people got really caught up in a moment versus really thinking through what do we need societally. And you see that happen quite a bit, overall. I think people get caught up in moments instead of asking, okay, what's really happening and what's clarity around this moment in time?
So where do the other opportunities lie? I mean, we talked about this software first defense prime that you'd sort of spoken about, but there's this piece you wrote back in 2020 called Products I Wish Existed, including that.
Yeah.
What about today? Like, what would a 2024 sort of revision of that list include?
Things that I wish existed? Yeah. I still think there are 2 or 3 areas in defense where software will be really important. And there's some companies starting to emerge around this, which I think are super interesting companies. So I'm still very excited about that area. There's a ton to do in AI. So I think there's a lot there. I won't belabor that point. Technology will continue to transform multiple areas of society, and there's certain things that have happened faster than I would have thought, and certain things that still haven't happened. And so I'm waiting for certain things to emerge in biotech and drugs and in software and all over the place.
So, I mean, as we've seen, just to take, I guess, a million steps back all of a sudden, sorry. Tech markets are 10x plus bigger than they were 10 years ago. Suddenly there's way more billion-dollar companies that can be created. There's network effects too, right? So much of tech is used to create other tech, is used to sell into tech. And yet with 10x more capital in the system, there aren't 10x as many great companies being started. So across the company lifecycle, like where does this all go? I mean, recently we've seen a lot of mega funds sort of in parallel having like niche or verticalized funds with everything in the middle kind of getting squeezed out. A lot of people are trying to go earlier to find any opportunities, be it scout programs or incubators, any of this other stuff. What does the future hold here? Is it multi-stage, multi-sector, multi-strategy? What do you think?
Yeah, I think it's all the above. I think the thing that tends to be a little bit under-discussed is basically, so do you know why companies have a 4-year vest? Or when that was invented?
Specifically, why 4 years?
Yeah, why is it 4 years? Why isn't it 6 years? Why isn't it 3 years? Why
No idea.
Yeah, so basically in the 70s, it took about 4 years from when a company was founded to when it would go public.
Whoa.
And so the 4-year vest reflected how long the thing was going to be illiquid for, right? Literally. And if you look at the companies that went public in the 90s, they went public really fast, right? Yahoo went public after 2-3 years. I think Netscape was like 18, 24 months. And basically what happened is there was a few different shifts. So one was Sarbanes-Oxley in the early 2000s, which helped regulate what public companies had and didn't have to do. The second is you had this dot-com bust, which meant that there was a shift in terms of people's fear of being a public company or perception of what that means. And then lastly, there was a shift to founder CEOs, when before most of the CEOs were hired guns who were kind of focused on liquidity versus people who would take a much longer term view. And that really shifted, I think, when Zuckerberg brought on Sheryl Sandberg as COO instead of CEO because he controlled the board at Facebook. And I think that set the tone for a lot of other companies, and that's when you really saw founder control kick in a big way. The way you could have founder control before that was you ran a profitable company from early on, and that was Bill Gates, and that was Michael Dell, and that was sort of all these giants of that era. And so the 4-year vest comes from that because the assumption was it would take 4 years to go public. As that got longer and longer, a lot of the capital that would have been invested into early public companies shifted to private funds. It basically went from public market capital to private market capital. And that's one of the reasons these funds can be quite large, is if you're doing a growth round 4 or 5 or 6 years or 8 years into the life of a company, you're effectively playing the role that the public market capital that was pro-growth used to play decades before. And that's the reason these funds have actually been able to get so big. One is the span of opportunity, but actually it's the stage at which they invest has subsumed what public market investors used to do.
I want to talk about AI for a bit. You've invested in AI, I guess used to be called ML, for like over a decade now. And for a long time you mentioned like nothing really worked, right? We had deep learning and CNNs and RNNs and GANs, which went to incumbents for the most part, right? Your recommendation feeds, your Netflix recommendations, whatever. To be fair, it feels like the bar for what we call artificial intelligence seems to keep moving. But there were these 2 big architectural shifts that you always point to. Diffusion models in 2015, transformer architecture in 2017. Each of them really representing this discontinuity from what the past was. I'm curious, in talking with lots of very smart people like you do every day and in reading some of the scientific literature maybe, do you see another discontinuity at the edges?
I don't know, it depends on how you define a discontinuity, because sometimes you have these things that with scale continue to become more and more dramatic in terms of their impact. That was the internet, that's mobile, that's actually a lot of these things. Crypto, if nobody used it, who would care even if it was a big technology discontinuity? And what we're seeing is that with each step function of model, you have a big step function in capabilities. And so one could argue that GPT-8 is going to be a massive disruption relative to GPT-4.
Sure.
And so I think we're on this crazy exponent right now. And to some extent, every couple years, we're going to feel like there's been another breakthrough simply because that curve is an exponent versus linear. So I do anticipate that this wave is just going to be insane. It's going to be very impactful, and it'll start translating into the real world with better and better self-driving, maybe some robotics. Like a bunch of this stuff will eventually happen. And that's going to be incredibly important.
Kind of a side note here, mentioned this sort of shift in transformer models. They were literally invented at Google. Why is Google not like crushing right now?
I think Google is catching up really rapidly, and they're a company that has the capital base, the talent base, the cloud compute base, the database to do some of the most interesting things in this area. And the rate at which they've woken up and said, okay, we really have to jump on this, I think has been really impressive. Especially for an organization of that size, going from like a slow start to really aggressively fast is really important. I think also at Google, a lot of the emphasis on forward-looking AI was either in its own products, and Google was always the world's first AI-first company, right? Even 20 years ago, it was doing really interesting things with algorithms that nobody else was doing, or with machine learning that nobody else was doing. So I think it's always been at the forefront. The question is, why didn't it translate transformers sooner? And it was actually transforming or using AI in other areas that other people weren't yet, in biology and protein folding and biological modeling. Like they got really into a lot of the material sciences and other things. And one could argue maybe that means they were less focused on some of the NLP scaling related things. Even though they had massive NLP systems for all sorts of things, it just wasn't based on the transformer architecture. So yeah, I think they're going to catch up. I think they'll do great.
It seems, if we're looking forward here, time-wise, that there's kind of three possible outcomes as far as AI is concerned. One is world of monopoly, where like presumably an OpenAI or something is kind of the only shop in town. World of oligopoly, where OpenAI, Google, Anthropic, even some niche players like a character AI or something, and some open source stuff maybe backed by Meta, Amazon, who knows. And lastly, sort of a fragmented world, right, where you have lots of different sort of domain-specific niche stuff, where open source probably has some kind of real dominance. I've heard you use a really great analogy to the semiconductor industry in the 90s. I'm curious what you think the most likely outcome is here over the long term.
Yeah, it depends on how long term you're thinking.
Okay.
If you're talking 3 to 5 years, I think that's different from a decade.
Yeah.
I think in the next 3 years, say, we're going to end up with an oligopoly market at the frontier. And by frontier, I mean the most advanced, biggest, at least LLMs, right? And when people talk about foundation models, it really means a bunch of other stuff. It means image and voice and video and music and robotics and biology and all this stuff. But if you're just focused on the LLMs that we're talking about today, the OpenAIs of the world, the GPTs and things like that, I think it's going to be a oligopoly market at the frontier. So there'll be a couple players that'll be important. There may be one that's ahead, like OpenAI is today, and maybe it's still OpenAI who's ahead. But there's still a lot of other people that are relevant and useful and all the rest. And then I think there'll be a lot of fragmentation behind that in terms of size of model and scope, although I do think it'll consolidate probably across a few different platforms, right? In reality, people don't use like 30 different databases in most companies, right? They use Postgres and something else, or they use something for structured versus unstructured data, et cetera, or specialized use cases. But the reality is it kind of consolidates down from a market perspective. And I think even in the fragmented models, the base models are largely going to be a handful of things. And that may be a mix of both some of the open source and closed source. And it'll just come down to the economics of running these things. I think there's also wild cards right now that I don't quite understand in this market. You mentioned Google, that's one. I think Llama and what they've done there is amazing. I've been incredibly impressed. And if it truly is open source and free under a certain number of users, I think that could dramatically change the industry if they ever catch up to OpenAI, because it shifts a lot of the value. The economic value will shift then from the closed source providers to the clouds, because the clouds can then run these open source models in a way that's performant. And all the enterprises want to run all their data next to the model. They don't want to ping out and have the cost of a round trip in terms of time. They want to be able to spend Azure Marketplace credits on it. They don't want to have to go back through procurement and all the rest. And so there's a lot of reasons that as an enterprise buyer, you'd rather just have your AI model running on the same cloud as everything else. And that means actually that somebody like Facebook or Meta could actually accumulate a lot of value by cutting licensing deals for these big models to run on the main cloud providers over time. So that may be an interesting economic model. I don't know whether or not, or how they think about the world. I'm just saying I think that's an interesting side effect that isn't being talked about. And then you have things like Mistral, which are like open core, which I think are really interesting as well.
I like that you use the French pronunciation. Mistral.
Oui. Yes.
Mistral.
Champignon. So I think they're a good example. I do that all the time too. Instead of Colombia, I say Colombia. No, I'm just kidding. I don't do that. I actually don't do that. It's funny. I was talking to somebody about AI safety.
Yeah.
And they said, aren't you worried about these open source models like Mistral and the safety implications of open source? And I said, well, is the concern that they're going to export French culture around the world for their model? You suddenly have 30-hour work weeks, and you dress nicer, and is that like an existential threat?
Yeah.
So that keeps me up at night. Sometimes I worry about that. what were to happen if we were to export French culture.
Really difficult. Really difficult.
That's very scary.
It's the doom scenario.
Yeah, I'm a doomer on that. It's very like, start eating healthier food. Like it just seems very
tough times ahead.
Some wine during lunch sometimes.
Tough times ahead.
Yeah, it's scary. So then there's things like Mistral, which are quite interesting. And then I think a related question that's kind of interesting is the degree to which local governments support regional models. So if you look at Airbus versus Boeing, the two companies exist because of regional spend, right? Airbus is propped up in part by Europe, Boeing is propped up in part by the US. And for certain types of technology, regional governments want to explicitly support the development of their homegrown version. So say that all the governments in Europe spend on 2 or 3 LLM providers, mainly in Europe, that may actually make those companies be giant companies in their own right, right? And so I do think there are these other dynamics at play. There's India-specific models, there's Falcon in the UAE, there's a new model company in Japan. So if those become regional champions, they may or may not, right? I don't know what the future holds. That could be really interesting in its own right because you effectively have government sponsoring certain model companies. Yeah. But that's definitely happening in China right now, right? As we know. So minimally China does that, maybe other chunks of the world do. So I think there's all these dynamics that I both don't know the future on, but I think people are kind of not really discussing very much that are pretty interesting.
Let's talk about AGI. It seems the optimistic view here is that this is like an amazing tool. It's going to help us build a bunch of amazing things. Whereas maybe the pessimistic, and we'll get to the doomer stuff in a little bit, but for now, just the pessimistic view is that nobody's really going to have anything to do anymore. And some people sort of argue that, it's not going to be able to be better at us at XYZ thing, whether it's like chess or poker or whatever game, but it kind of like continues to do that. So that argument I think starts to fall apart a little bit. So as a two-pronged question here, one is how do you define AGI, like what that actually means? And before we get into the weird like intraspecies competition thing, what are some less obvious scenarios that exist in that reality, whatever that is, as far as the way we interact with AI is concerned?
Yeah, I feel like there's a lot of other questions you were kind of referring to too, in terms of like what's the future of work and what happens to people and all this stuff. And I don't know, have you ever looked at so there's a certain rare class of mutation that actually causes people to sleep less or need less sleep. There's 2 genes, I think one is, I can't remember if it's PER or one of the other genes, but it's well documented that there's families where they have a knockout in this gene and then instead of needing to sleep 8 or 9 or 10 hours a day, they need to sleep 2, 3, 4 hours a day. What do you think they do with that free time? You have an extra 6 hours a day to do whatever you want. What do most people with these knockouts do?
Probably nothing.
Watch TV.
Yeah.
Right?
Yeah.
And so you look at that and you say, okay, societally, what do people actually want to do? And there's a subset of people who want to do certain things, and there's a subset that want to do other things, and then, and so I don't quite know what the equilibrium is, and the people I worry about the most actually are the people with the highest motive force, or the highest sort of self-definition of worth through work. And those are the people that I worry about most in terms of this new world. Like if you actually don't want to work and you don't want to do all these things, maybe you'll be happy with it all, who knows? Or you want to work on a specific hobby or whatever it is. But I don't know how that future world evolves, and I don't, I think it's very hard to extrapolate these things, and humans have always found new things to do, but who knows, right? If a machine is superhuman on everything, I don't know what that implies. I don't know how to define AGI. I think lots of different definitions are floating out there. I think people choose what definition they want, and the definition of superhuman keeps shifting, to your point. Like in the 80s, AI or artificial intelligence meant a helicopter could pilot itself, which obviously can happen now, right? And so they keep moving the bar. And it's possible the bar on AGI will also move over time. So I just, I don't have a good definition for you.
Another sort of pessimistic view here, I guess to take things a little bit further, is that AI competing with humans as a species is like something that could happen. We have sort of, I think, as I understand it, correct me if I'm wrong here, sort of 2 prerequisites, right? First, you need the AI to be able to evolve and replicate, and you have, I don't know, like GitHub Copilot already writes like a huge chunk of an engineer's code. People are actively working on stuff that'll write the next version of itself or make digital copies of itself. I interviewed Robin Hanson not too long ago, who has like a really interesting work on this tangentially. And the second prerequisite is that the AI starts replacing things that people already do in the physical world, right? So data centers and solar farms and factories, et cetera. And here we've kind of like crossed the Rubicon, right? Because it has a physical form. So can you walk through this and why you're actually long-term kind of like apocalyptic on a lot of this stuff?
Yeah, I guess the way I would phrase my point of view is I'm kind of like an AI moderate. I feel like there's one community which is incredibly concerned that AI will kill everybody tomorrow, and there's another community that says we should accelerate no matter what. And I'm somewhere in the middle where I think in the short run, AI has enormous benefits at human scale. I think it's the biggest single driver of potential human equity around healthcare, around education, around all sorts of things. And so I think in the short run, I'm hyper optimistic about AI and its applications and the way it's going to lift up humanity in all sorts of ways and be very valuable. And then I think there are some scenarios in the long run where, things could be existential from a risk perspective. But I feel like a lot of the paths that people draw for those things tend to be very poorly actually thought through, or there's no real precedent for them, and it kind of feels like fairy tales in some cases, right? So the whole AI is going to invent a virus that will wipe out a big chunk of humanity. You're like, well, how does that get manufactured? Is biological modeling actually that good? It's not. Like all the pieces to actually do that don't really exist. And so you wonder, why do people point to that as a common scenario? That was actually one of the main points made in Europe around why to regulate AI was, maybe AI will help somebody malicious come up with a virus. And you're like, well, where's the logical chain that any of this stuff can actually happen in reality? And that chain is often missing. And so I think where the doomer community gets things wrong is making up these scenarios for which there's no real basis, at least today. And I think where the accelerationist community sometimes is correct and sometimes incorrect is acceleration at all, no matter what. And I think today that's probably correct. I don't know what it is 20 years from now. I don't know what it is 40 years from now. But at the same time, it's so hard to presuppose exactly where we'll be that I'd rather not give up all the upside of all these amazing things that the technology can do.
I want to take a minute to talk about the deterioration of speed. I think we really got a glimpse of what's possible over COVID, right? We saw the development of multiple mRNA drugs in 9 months. Patrick Collison, co-founder of Stripe, has a page on his website where he collects examples of things being done quickly, which I love. The Eiffel Tower was built in 2 years and 2 months. The iPod took 291 days to make. The P-80 shooting star, the first jet fighter used by the US Air Force, was designed and delivered in 143 days. That's absolutely mind-blowing. Why do things seem to take so much more time now?
Yeah, I'm guessing it's three things. I think for certain types of organizations, it's just bloat and sort of reversion to mean. And I think people forget that in every field, there's 10x people. Like people who can accomplish 10x more, can think 10x better, whatever it may be. And that's true in mathematics, that's true in biology, that's true in writing. Isaac Asimov wrote 500 books over his lifetime, as did Ursula Bloom, right? So you see these people who have, these dramatically better capabilities than others in certain fields. And often you see that small groups of those individuals are the people who actually drive progress. And so the real question, for example, is in the AI world, what is the total number of people who are driving all of AI progress in terms of the main stuff? Is it 50 people? Is it 100 people? It's probably less than 1,000, and it may be quite small, right? And that's true for everything, if you actually look at it, right? There's a lot of people who help on the edges or help fill things out or whatever, but in terms of the core pieces of everything. And so part of it is like, where can you have small organizations actually make an impact, or small groups of individuals? And in some cases, the obstacles you have to overcome are so large from a regulatory perspective, from a resource risk perspective, et cetera, that you just can never get there, right? Or you just are really slowed down. I think regulation in multiple fields is a big part of it. Like this also happened in the 40s, where Churchill wanted a drug to treat a syphilis or gonorrhea in the field for soldiers. Gonorrhea. And so he said, we need to find a drug, and you have a year to do it that will help with this. And they rediscovered penicillin and then turned it into a drug in a single year, right? That's amazing. And again, it wouldn't have happened if there hadn't been that motive force of we're going to drop all sorts of constraints to go do this. So I think that's part of it. In some cases, it's just pure expense. I was reading through the history of Abu Dhabi and Dubai, and the port that was built in Dubai was apparently built in part because the person who was running Dubai at the time said that if we don't build it now, it'll be too expensive to build in the future, because labor is cheaper and the land is cheaper and all these things. So we're just going to do it and do a massive investment, and hopefully it works. And so sometimes you also need those sorts of bold viewpoints. And then also there's a lot of things that people just continuously say that it shouldn't exist or can't exist, to the point where everybody believes it until somebody does the opposite. And that was electric cars, and that was a space company. That was also payments. The lore in Silicon Valley and the after PayPal got acquired was that payments is too hard and there's too much fraud and you just can't do it. And so for 5 or 6 years, there were just no good payment founders. And then suddenly you had Square and Stripe and iGen and all these companies. So I think sometimes there's also these mimetic things that kind of prevent progress. But I think, Patrick and Tyler Cohen have sort of invented this field of progress studies. Like, how can you actually study things that cause progress or the rates of progress? And I think they'll be way more articulate than I will on this stuff. I think it's super interesting.
On the topic of making progress or bloat or regulation, before starting Color, you and a friend had gone to tour a ton of nuclear labs and all the startups in the space you could find. In 2007, when you left Google, you started one of the first consumer carbon offset sites, which I think is really interesting too. Unfortunately, nuclear is probably another example, right, of something that the population was positive on until it got shut down in the 70s, when the oil lobby and the Green movement tried to shut it down. We've spoken about the bureaucracy and the regulation that's kept adoption from happening at scale, but what's the state and sort of biggest opportunities in nuclear as you see it right now? What would you build?
Yeah, it's interesting because people make the analogy between how we regulated nuclear and how we should regulate AI. And you're like, that's awful. Look at the end result. We shut down nuclear in the US effectively, right? And so it stymied any forward progress on something that it was actually reasonably cheap, very clean, very safe technology. I remember seeing some thing circulating that said that more people die falling off of roofs installing solar than from nuclear accidents, if you just add up the last 50 years. And if you actually look at the Wikipedia page on nuclear, most of the deaths are actually things like Russian submarines having issues underwater or radiology clinics giving too much of a isotope for treating cancer or other things, right? And so there aren't that many deaths actually really associated with reactors, although it's been blown up that way. And it's been blown up that way purposefully. Again, I think there's this scarcity agenda that exists in the world and people are actively working against progress. And I think that's very under-discussed. From a nuclear perspective, you look at the technologies that are in use today in terms of the installed base in the US, it's all technology from the 60s and 50s. 60 years old technology that's been working for the last 50 years plus. You look at accidents, extremely, extremely low. You look at actual deaths, again. So the reality is we have this clean, safe technology that even if we did nothing new would work. And there's been all sorts of advances in terms of reactor design to make it safer, et cetera. So fusion alone, there should be lots of it, and it would really change the way our entire world works because energy is an input into everything. And it's the most expensive input for a large part of our industrial base and society. And you see Germany now, in effect, having sort of an industrial recession in part due to their energy policy. And they shut down nuclear reactors, right? And they started burning coal, which is amazing if you think about climate. Obviously, there's a lot happening right now in fusion, which I think is a very exciting area. And I feel like the surface area of exploration on that has expanded very rapidly in the last year or two because there have been increasing proof of concepts around different approaches to creating fusion, be it through different types of lasers, excimer lasers or otherwise, through different forms of magnetic pulsing. Like there's all sorts of very interesting things that have been happening. And so then the question is, what's the time horizon until we actually have fusion? And when does that happen in an economic way? But between now and then, the unexpected thing for me is the adoption of solar has really accelerated. And so that's been fascinating to watch. Like that's actually ahead of where people thought it would be, at least in the US. So there's all these things happening at once. And again, we could have had very, very cheap energy for the last 40, 50 years, and we chose not to, societally. But hopefully with these other technologies, we're going to be more willing to adopt them.
All right, I've got like 2 more for you. Well, no, I've got 20, but I'm going to ask 2. Okay, so one is sort of a long story that I think is actually really interesting, and I'd love to hear your take because you're kind of the subject here. When you moved to the Valley, you joined a startup that grew to 160 and shrank to 13 people over 5 rounds of layoffs. You were laid off in the 3rd round. A prominent investor at the time ended up introducing you to a bunch of startups, which really proved to be life-changing, right? You didn't have any money. If you didn't find a job, you were out of here. You ended up sending him a thank you email a couple of years ago, and he responded being like, I don't remember that at all. This reminded me of the story of Steve Jobs in the 8th grade building a frequency counter for a school project and calling up Bill Hewlett at Hewlett Packard, ended up meeting for him, working for him for a period of time. Long question here. I think tech and startups and venture are really unique in this way, but people just seem to be a lot more willing to be generous with their time, like this, and to talk or help people out, more so than any other industry I've seen, even you, right? But there's a positive undertone in tech that really makes it different. Like, why do you think that is?
I think it's 3 things. I think first, the origins of tech was a small, tight-knit group of people working on semiconductors, and they all knew each other, and therefore, even if they set up competing companies, to some extent, they would help each other. And so if you read about the early history of Silicon Valley in the 60s and 70s, there was a lot of cross-collaboration and cross-pollination, and everybody worked with each other. They all knew each other. So you had a high-trust community at the get-go, and I think that then propagated over time, right? The basis of the culture was high trust and mutual kind of help. I think secondly, technology is driven by a lot of people who are effectively nerds, right? At least it traditionally has been. That's shifted over time more recently. But it's people who care a lot about technology. They care about the future. In some cases, they'd read sci-fi that was very upbeat about the world. And so there's a lot of commonality and common threads in terms of just the thinking that goes behind that. And therefore, the interest in making progress happen, right? And I think that's very important as well. It's kind of like the things that you cared about as a kid translate into what you work on. And you're not driven by just money or just power or just whatever. You actually want to do something useful for the world or do something interesting, and therefore you attract a different type of person or personality. And so I think that's the second piece of it. And then I think a third piece is, if you benefit enough from other people helping you, you want to kind of pay that back, and not everybody does, but I think some people do. And usually that's enough to keep it going.
So one more question. It's the last one I ask at the end of every interview. Inside or outside the scope of anything we spoke about, what do you think more people should be thinking about?
No, it's an interesting question. I think fundamentally, one big piece of it is like, how do you ensure that the world can progress and that you can create a better life for your kids, or and I think it's really interesting. A friend of mine has this theory that you should only let people with children vote because they have a true stake in the future. I wouldn't go that far, but I do think that fundamentally, if you think long-term enough, you realize that a lot of things that are being done are really bad micro-optimizations that should stop. And you also focus more on progress and how do things get better, and how does the education system get better, and how do you create a good economy because you have a stake in the future. And so I think that's one thing that I think is important to think about. I think separate from that, I feel like people are increasingly realizing this, but they should really question what they're being told. And they should really just look at information and data and primary sources and really realize what's real and what isn't real. And I think more people are doing that now, but I think there's a big gap of that for a couple of years. And hopefully it becomes more and more something that people do.
Elad, that's all I've got for you. Thanks so much for doing this.
Thanks for doing it.
Appreciate it.
Yeah.
Thanks for having us.